What's going on, everyone? And welcome to this week's live backtesting session. This week will be, I think, as I mentioned last week, on fair valuation. Just scroll up. Fair valuation. And I'll be backtesting EURUSD on the 4-hour from January the 1st to March 29. So that's essentially Q1, because I have backtested Q2 already. The bar replay tool will be used just for a more realistic simulation, as opposed to how I've kind of been backtesting in the past, where I've just had the charts open and I'm just observing essentially what the focus of the session is. And trades will finally be taken on the 4-hour time frame, with before and after screenshots recorded. So yeah, I'm in a position where I'm now able to start identifying observing is good to get a feel of what's going on, but I think the real insights will come from where which is when is essentially identifying sort of optimal trading conditions. In the previous session, I did only for buys. In this session, it's going to be focused on both buys and sells. So yeah, so when price reaches equilibrium, we determine where it's going to go next by essentially observing recent consolidations and confirming whether swing low or swing high was broken, to then anticipate a continuation of that impulsive nature. So that just goes back to phase identification, understanding that the market moves in impulses and consolidations, and then obviously that is the foundation of identifying a trade and then subsequently trading in alignment with that trend. We blend concepts when determining fair valuation. So we'll look at a current range, and that's almost the starting point. We must have a swing high, a swing low, and we observe whether we're in a premium or discount. So if we have a swing high coming down to a swing low, put out our fib tool, and that's going to tell us where the price is currently in a premium or discount area. For if we want to go short, we obviously want price to be in a premium area because we want to dispose of our assets at a premium price. We don't want to get out at a discounted price because that's when we obviously forfeit additional returns on that investment. And then we also identify key indicators which support fair valuation in premium or discount. These are order blocks or fair value gaps for now. And so essentially that's observing a range, looking whether it's premium or discount. And then if it is in premium, if we're looking to sell, we then identify key indicators that will confirm that price has a high probability of reversing from this area within the overall premium area, and vice versa for discount, the discount area when we're looking for buys. High time frame breakouts of consolidations give a strong indication of bias, uh, phase identification. Fair value is a point at which market makers can accumulate or offload positions. And essentially, market makers don't want to liquidate positions, liquidate longs at discount, and vice versa for shorts. So we need to, I think, just building on top of the previous backtesting sessions, be mindful of the following: the interbank price delivery model, consolidation, expansion, and then either reversal or retracement and then continuation in the direction that we expanded in. And then old highs and lows that haven't been retested. We know that the market likes to then come back and run these highs or these lows, as well as then how price reacts to clean highs and lows, building on top of previous sessions, and then areas where price move quickly away from. This is normally where order blocks are formed or where we have fair value gaps. Something I also want to add is, in terms of being mindful of, is the time at which key indicators form, i.e. kill zones. And then, okay, again, house rules. I'm going to work 1 month at a time. It's a 4-hour time frame, so 1 month goes fairly quickly. Identifying impulses, corrections, and continuations as per the criteria above, and then discuss my observations after each month. This will obviously depend on the number of setups present each month. If there's anything critical that I need to discuss, then I will stop and discuss that. And then we just have screenshots. Then within there, just have January. Let's do that. Blue. February. And March. Then let's do trade. Then I'll either have 1 or 2, and then we have before on the 4-hour, and then we'll have after. And let's just hold an italic that. And we can have just multiple there, and just keep one for each month. Okay. So yeah, that's just a quick rundown of what we're going to be doing. The session will run approximately an hour. And yeah, I'll just determine where to stop. If we obviously get to the end of a month, obviously we won't start a new month if we're at the end of the hour, or end of we close out a position or something. Obviously we won't stop the session in the middle of a position because we'll want to just see that through. So yeah, let us dive into it. What's 2023? Shake this off. Yeah. So for the session, um, I won't go onto the daily and see obviously what where we are in terms of premium or discount from those overall daily swings. Just because I think yeah, I just want to do the 4 hour on its own for now. I think over time then we'll start introducing multiple timeframes into the backtesting sessions. So I'll solely base it on 4 hour um, levels for now. And arguably I've seen that this is obviously going to trade lower, but I will try remain as objective as possible, as if I didn't know that. So just a quick one. I don't as yet. So while I've been able to identify where I'm looking to enter from, so in this example, you saw I initially pulled out two fibs, ended up deleting the one just because we extended beyond that 79% retracement level. But confidently, we got within the discounted area and arguably very close to the optimal trade entry area. And that aligned with this order block. Yeah. And so I've identified now that this is an area that I want to take longs in. I think to keep it neutral, my entry confirmation will be similar, uh, basically exactly what I look for at the extent of an impulsive swing. So remember, we look for that high, and then we count four candlesticks, and the fourth candlestick must close beyond the candlestick that formed the high. Hence, here, so we had this high, at the low, the high, and I'll either count from the candlestick just before or the candlestick of. Sometimes it's exactly four, other times it extends beyond. But in this example, so we have 1, 2, 3, 4. This candlestick closed beyond that. And so then I'll point that a break of structure to the downside. So essentially then if I was looking to enter in this area, my order would be at the close here with stops then above that high and then TP wherever TP is going to be. And so similarly now in this area, we were trading at a premium here. It was a bullish impulsive swing. This was the beginning of this parent swing. And now we are in that discounted area, confident order block. The blue ring marks where I've started my fib from. Identified that the high was formed in this London kill zone. Currently at this order block where we formed the low. This is just Wednesday during New York session, so nothing too significant. But then I will wait for fourth candlestick that closes above the candle that formed the low. 3, 4. So this one, if it's taken from either this one before or the candlestick of, it's 1, 2, 3, 4. And arguably this the fourth candle, or if I start counting 1, 2, 3, I need to wait one more candlestick for 4. I think for the purpose of the session, let's just do it from the candlestick that formed the high. So in this case, it will be this candlestick here. We had 1, 2, 3, 4. Because more often than not, I start counting from that candlestick. So here we have 1, 2, 3, and then see if we get one more. 4. So entry would then be taken at the close there. Just to round it off. We have 100 pips up. It's a 4-hour time frame, so bear in mind there. Look, technically we would be targeting the equal highs, but that's not even a 1 2. It's about 1.72. So I will also gauge if the risk to reward is worth taking in this case. If I had taken a chair, look, we would have had more than enough to play with. But the entry is, yeah, it's just come after that impulse. So I won't take this, but I will now look to scale in, for example, if trade higher and then we start correcting, I'll mark my swing point from there. Obviously look for that discounted area, then look to take that higher. Should get a tighter stop. And then obviously risk to reward that satisfies the criteria. So this is a low time frame entry, but we've had our impulse we had 1, 2, 3, 4, 5, 6 before we essentially closed, and arguably we need to still close beyond that wick. So I'll wait for this. Not in discounted area yet. Okay, geez, now we are. And this one's going to be a bit tricky now because it's obviously a low time frame entry. I don't know if I'll get 4 candlesticks to enter long off. Perhaps in this case, I'll just look for one reversal candlestick to the upside. Got that, we ran this. But now, yeah, this is technically invalid because now we've ran beyond our 100% level. So I would then look for another impulse and then same correction before going higher. What I also need to be doing is looking for now where this is likely to pull back to, because we have we're looking for both now premium and discount longs and shorts. And so this is formed now this low. Let's say 1, 2, 3, 1, 2, 3, 4. So we've closed above this candle that formed the low now. Ran the liquidity. And so I'm now looking for, obviously, price to trade higher. You understand why I'm looking for longs in this discounted area. Now it's also looking for shorts. Even though I'm long, I'm looking at where I could potentially target and where I could potentially start taking shorts from. Look, I won't do the whole management for now because it might take a while. I'll maybe just do break even uh, once we've had a push down or up, a pullback, and then a continuation, like we have had here. And I think just scrap what I was saying about how I'm going to enter, just because, yeah, the market may not always give me four candlesticks, which is essentially like a whole day, to enter at a key level. And I think that just also goes back to, if price is in a discounted area and the sentiment is bullish, price won't maintain discounted levels for too long. Vice versa for shorts. So I will just look for the area that I want to enter and at least one reversal candlestick in that area. If it is a key area, then we should get movement from that area. Yeah. So I'll just go through, yeah, this first trade, because we are kind of at the end of this first month, just before we see how this next trade plays out. We've got so this first trade, you could see price was trending lower, and if we just remember, if we go back to the notes, just remember high time frame breakouts of consolidations give a strong indication of bias, and so we had this first consolidation, we broke to the downside, while we were still trading within an overall bullish pullback. It told me that at least for now, we may see a continuation of price heading lower. And so we entered another consolidation period. And then that's when I, off this swing here, it's not, I'd say, the parent swing, because that would have had to come from uh, the point much higher. But remember, you can just take it from whichever swing high point to, the subsequent lows, just to gauge the pullback in that sort of period. And so we reached up into our optimal trade entry area. We had run these lows prior to that. And I think what gave me a bit more confidence in this trade is that we fell just short of this order block, but as well the 79% level. So that is kind of known as inducement, where we then start to trade higher as a false move almost to build liquidity to then come lower into the intended level. And so recognize there was a bit of inducement there, occurred during London New York zone, and then we came higher, we swept this liquidity, and then confidently fell within this one-sided fair value gap uh, for our retrace, and yeah, set the order. Was quite confident in that, and then yeah, price started trading low from there. We literally just missed TP the first time round. Fortunately, stops were just at break even, so we reversed higher, and then ultimately did come lower to hit take profit, and so yeah, that was the first position. And then what we essentially have now is we still had our first fib tool on, with price coming lower. Identified this order block, which we had previously used as a point of take profit. Now it's a point at which I see price trading higher from, because we are now in a discounted area. If we look at where we are below this 50% level, within that optimal trade entry, tapped into this order block, good quick reaction from this heading higher. Then we got the tap into there. We swept liquidity as we tapped into this key indicator level, and we've had a bullish retrace to the upside. In terms of technically, I should be targeting these highs up here, and I think just as to remain neutral, I'll add this as a almost TP3, but that is a much higher sort of profit target, and I don't know if we'll achieve that. But look, let's just put it on for now, just to see or gauge how we do. But to be honest, I'm just targeting these most recent highs from these consolidations above this first one as a TP1. That's about 1:2, and then above the high of this consolidation as a TP3. And so, yeah, and now we are basically entering February. So about 1 month done so far. Let's see how this plays out. I was pausing. I thought I was going to go to break even, but not yet. Okay, and we are stopped out. Um, yeah, for those of you who may be wondering why I didn't go to break even though we were well beyond the 1% mark. Remember, like I'd said, I want to see price impulse in the direction of my trade, pull back, and then continue higher. And we didn't necessarily, we did impulse higher, but we failed to pull back and continue, which would have then, yeah, given the confidence that we were then trading within, or at least starting to trend higher. Right now, we're still kind of consolidating. We haven't yet. Okay, we've kind of broken this order block, but it held for some time. So just make a note here. I tagged this before. Don't think I did. Hmm, I have to work backwards here. It's loss taken. So sorry. 1:3. And I think before we close out the session, I just want to see what happens next because I want to get a bit more clarity. I think just in terms of why the position may not have played out, and then just add some notes to that, just as some key takeaways. Obviously, improve going forward. Yeah, the only thing I'm kind of really gauging is that the price was just continuing to trade lower. We never really started to establish any sort of trend to the upside. And while this was, a higher time frame pullback, there were a lot of confluences. It just didn't really play out. Um, and I can see that there would be some really good opportunities to get short from this area that are coming up now. Just if we take from the swing high down to the swing low. Yeah, we are at this key level, so something to just be mindful of. But the fact that we've reached there, I do think we're gonna most probably sweep that liquidity and come down into these areas here that are resting just below, I guess, this large bullish fair value gap. Let's see. Okay, so yeah, while this did continue lower, we didn't get a move into premium. We remained at discounted prices, and that happens sometimes. It doesn't always come to the upside, but we did ultimately come lower to the below these lows here. And yeah, how far we go, I will probably determine that in my next backtesting session. But I think this was, yeah, a super productive session. And we had two positions overall. The first one, 1:2, that was a profitable position. And then the second one was a 1% loss. So we ended the session up 1%, and we got through January and about halfway through Feb. So yeah, the learning continues. Next week, we'll have the next lesson. I will complete backtesting. Uh, yeah, some interesting insights. Sorry, uh, network issues. But yeah, definitely some key takeaways that will just continue to inform um, yeah, how I go about building this new plan as I learn more information. I hope you guys enjoyed the session. And yeah, we'll definitely same place, maybe not same time next week for the next lesson. Remember, guys, consistency is a choice you make when you start doing the things you know you should be doing day in and day out.